It's been one of the big tasks recently to keep a track of just how much stimulus that central banks and governments are pumping into the system. For example, the big bazookas, including that $2 trillion from the US. There's 1 trillion available from the IMF. The near 1 trillion we've already seen from the European Central Bank, 825 billion from Germany, and the list goes on. Estimates are for anything up to around about 10 trillion, I think, at the last count, is the amount of money that's either available or already been pumped in to the markets. Richard Windsor joins us now from Radio Free Mobile. Interesting headline in your most recent publication, Richard, or one of your most recent. It's raining money that doesn't exist. I want to look at the area, specifically about the area you're most intimately attached to, and that's tech, in just a couple of moments' time. But just picking up on this point about the QE that we've seen, what's your reaction to what's happening?
The problem is that unfortunately, the central banks and the governments are stuck between a rock and a hard place, which is, in order to prevent a massive system crash of both the economy and the markets, they need to pump in vast amounts of money. The problem is they haven't got any money, because if you look at the situation in terms of the gearing of the global economy, it's extremely high. And so as a result of that, they've had to print the money, or effectively print the money as you do in these days terms. So really what's going on is that they are flooding the market with printed money. And in theory, it should only be a matter of time before the market suddenly wakes up and realizes that the money, if you massively increase the money supply, huge inflation is the inevitable result.
You talk about them trying to avoid the first domino from falling, because if that first one falls, the whole lot goes down. Explain a bit more about this. What is the domino that you think's most at risk that could well start to tip us over?
Well, the problem is that they all are. So take the Fed, for example. The Fed has basically said, we will buy the entire bond market, these bonds, anything that has been government backed, municipals, government treasuries, so on and so forth. So that part of the market is now covered. But then what happens if, say, high yield corporate debt starts to get into trouble? And what happens is you get this snowballing effect. It can start very simply as people not being able to afford their rent payments, which means then the mortgage companies start to have a problem. They can't pay their debts, and so on and so forth. And what you could end up with very easily is the Fed having to bail out almost the entire bond market, including credit card debt, mortgage backs, and so on and so forth, which again massively expands the amount of cash that is having to be pumped in to keep the market afloat.
So have we, is the capitalist system in doubt, or have we gone beyond that now? Do you think that the capitalist system, certainly the markets seem to be dysfunctional?
The market is definitely dysfunctional. A great example of this was Facebook and Google the other day. The news comes out that, the market that drives their revenues is cratering, and their share prices go up, which is completely counterintuitive. The effective problem is, and I think this is the problem that this crisis has probably maybe brought forward 20 years or so, is the fact that there is just a huge amount of debt in the economy, and at some point this is going to have to be dealt with. And I think quite possibly what this is doing is just bringing that forward that day of reckoning.
Okay, let's pick up on that point you mentioned about Google and Facebook, because I do want to focus on that, because that's where your area of specialism occurs. With that in mind, as to what you just said about the fact that we had this rally in shares when we got effectively bad news, what's happening within the tech sector? A lot of the tech stocks are valued at multiples that we wouldn't normally see in the normal run of manufacturing companies or industrial companies, or those that we know produce goods and things that we use and love every single day of the week. So we already know that the tech sector was relatively overvalued. How do you see the tech sector moving from this point?
Well, honestly, I think the tech sector has a significant problem. And that problem is, as you rightly pointed out, a lot of it is on quite high valuation. And consequently, when growth collapses, then obviously that multiple that is subscribed to those earnings has to come down. So you've had Apple is a great example of this. A couple of years ago, Apple had a PE, if you took out its cash balance, of about 8. At the peak, Apple's PE was 24. And what that basically meant is a lot of much more value had been ascribed to Apple's earnings, future earnings, so to speak. Now what is likely to happen is both earnings are going to fall because people are not buying mobile phones, but at the same time, you also, the level of confidence that one has in long-term growth at Apple is also likely to fall because of the much bleaker economic outlook that we face. So what you end up with is a contraction of both earnings and the multiple that is applied to those earnings, which is why quite possibly we are still sitting on the edge of a very big bear market.
Okay, we've been talking about companies in the tech sector that make money: Apple, Facebook, Google, through Alphabet, of course, and others in the sector that are already making money. How about those that don't or can't monetize their offerings? I'm thinking about one of the most used functions online, and that's Twitter. We pretty much all use it to communicate, to tell people what we're thinking, show photographs, whatever it might be. But they can't monetize it. There is no value in that, is there?
Actually, to be fair to Twitter, Twitter has a couple of things that actually make it a better example of one that is likely to survive. First and foremost is Twitter is unopposed in its space. So if Twitter was to disappear tomorrow, there's no immediate alternative to go to. So from that perspective, I actually think Twitter survives. Now, to be fair to Twitter, in the last 4 quarters, they have made money. The company has made money. Yeah. What's happened now is that because it was investing for growth in 2020, that's not now going to happen. Obviously, they've gone back into a loss-making scenario. Now, it's not, if they're going to be in a scenario where digital advertising is going to be much lower, the company is in a position where it could cut costs to the point where it is sustainable. Because don't forget, some of these companies are capable of making money. It's just that they have not been making money because they are investing for growth. Some of them just simply can't make money. A good example of these two, number one, on the one that can't make money would be WeWork. On another one that's investing for growth would be Airbnb. Both of these companies are having a very difficult time right now, but Airbnb is likely to survive.
What happens to those companies? Do you think they just go to the wall, or do you think they'll be absorbed into other larger businesses that are able to perhaps maybe lever money out of the system that they've established in a better way? I'm thinking about the ability of Facebook to be able to communicate with billions of people and being able perhaps maybe possibly to, as I say, buy some of these companies at what could well ultimately be knocked down prices and make more of them.
Yes, I think there's a very good chance that's exactly what happens is some of these companies that have a viable business model but simply run out of cash because their business models and their latest fundraising was geared towards a certain level of growth that now may not occur for a longer period of time, means that they run out of money, means they're forced to come back to the market. And as a result of that, they may end up, being sold at a much lower valuation than otherwise would have been achieved. So I think there certainly is a scope for consolidation, and it'll be the big guys that do it. I mean, if you look at Apple, Google, Facebook, all of them are awash with cash. That means that there is a good opportunity for them to consolidate and buy up assets at much better prices.
Yeah, let's hope the coronavirus and all its associated effects are over as soon as we possibly can. If that is the case, and we get this big V-shaped recovery that many are hoping for, do we return to normal, or has a lesson been learned? I mean, you talk about the massive amount of QE and debt and so forth that's been accumulated.
That's a great question. I'm no armchair virologist, so I couldn't possibly tell you. But in the absence of a vaccine, I think things go back, but they're going to be slower. They're going to be more difficult because one has to be more cautious about the spread. Okay. If there is a vaccine, and my personal hope is that I'm sure, given how serious this problem is nothing galvanizes human innovation like a crisis. I suspect there will be a vaccine at some point, and I would imagine 2 to 3 years down the road, just a question of popping down the chemist or the pharmacy, getting your kit and your treatment, and dealing with it in a matter of minutes.
Okay, look, we'll leave it there. But Richard, thank you so much indeed for joining us. It's been a pleasure once again to be able to catch up with you. That's Richard Windsor there in Abu Dhabi, joining us there from Radio Free Mobile.